welcome to It's Covered, the Insurance Podcast, because if you think that insurance is boring, then you are not doing it properly.
I'm Mel.
Mel, how are you?
It's good. And yourself?
Still sitting in the dark.
Yeah, it hasn't come on yet, the electricity. So
it's been a week.
Yeah, it's been a week. We're down to our last biscuit. Rationing.
Probably going to turn to cannibalism at just any moment.
I caught a couple of rats in the back, just in case. We'll have to eat them.
So if you listened to last week, you know that our electricity went out at the office. And if you listen to us regularly, you know that we normally try to get a couple episodes in, recorded at the same time. Right. Once we have everything set up and all that, and so the audio on this episode is not up to the normal quality, but we still thought it was actually fairly good enough for you to just really half-ass this whole ordeal for you. This is what we think of you.
You are so important that we cannot miss a week. So regardless, we're better than the post office. I'm dating myself. Do they still say that? No matter rain, sleet, snow, they'll still deliver the mail?
I don't know. I remember Newman's response to that in Seinfeld.
Newman.
Yeah, Newman on Seinfeld.
No. I was thinking Norm.
He was trying to get a transfer to Hawaii, and I think this was this episode. But Jerry was helping him. But it came about that it was raining. I'm not sure if I got the right episode, but I know this part. It was raining, and they were saying, like, why aren't you delivering the mail? It's raining. I don't deliver the mail when it's raining. And well, what about the thing? Neither sleet nor hail or wind. He goes, I'm not big on creeds. So
that's right.
So yes, we are better podcasters than Newman is a mailman.
That's right.
I think that's a safe thing to say.
Because we have a creed: you will never miss an episode. Even
if the electricities are off. Even if we're down to our last rat,
that's right.
Here. Oh, wow. So, I wanted to talk a little bit today about a topic that we deal with a lot.
A lot.
Yes. It normally stems from people having no clue the way insurance works.
Right, that's right.
At all.
Which is not a knock on them. It's just, I wish they would admit it.
Well, and that's the real problem. Is I don't expect most people to know how insurance works,
right? Because
it's overly complicated. It's very dense. We've been working in this field for a long time. Mm-hmm. I just crossed my decade anniversary in insurance last month.
Congratulations!
Thank you. I totally got this job in 2008 because I needed a better paying job. I was about to get married. I needed a better paying job, and I knew a recession was coming. So I wanted to get something that they weren't going to lay me off right away. So I thought, a couple of years in insurance, and I'll move myself on.
And then you found out how great it was.
I really did. So still here today, and we'll be here tomorrow. But, it's like, despite the fact that I've been in insurance like 10 years, if you start talking to me and asking me questions about like underwriting, I have no clue.
That's right.
I have no clue. I know in general how things work. In particular, it's just a mystery to me. And so I get it that people don't understand this. But a lot of times what they say, when their rates go up, kind of betrays the fact that they don't know what they're talking about. But they think they do.
Yes.
So we want to chat a little bit about things that make rates go up. And, and it's like, the cynical view that a lot of people say is, it's just to make the stockholders happy.
Right.
And in a lot of cases, that's true. Mm-hmm. The stockholders are expecting a return on their investment. But I'll have to say, it's like, two of the best companies here in Texas. And I don't want to give out their names, but just comparing the two of them. One being, a public company with stockholders, and one being a privately owned company. The privately owned company's homeowners around here is more expensive, and the autos tend to be about the same. So that's not it. We kind of want to cynically just kind of lump that. That's our thing. It's just a greed of stockholders. We can't necessarily do that, and so things are a little bit more complicated. Mel, you suggested this topic, so explain everything.
Well,
now, go.
It starts back during two people named Adam and Eve. And it stems from there.
Okay, we had kind of a long introduction.
Okay.
For us to be going back 5
All right,
years.
I'll skip some years. So, a good way to make money is stop the places you're hemorrhaging money and losing money.
Mm-hmm.
And insurance, that is in fraud.
Oh, yeah. Mm-hmm.
Or in paying out things that you should never have paid out on.
Yeah.
Whenever they raise their prices, it's not just because they're greedy, or if they're losing money and people are stealing things or not going through self-checkout and getting away with money, they're going to try to stop that, and then they're going to compensate by adjusting prices so they don't keep losing money.
Mm.
And it's the same with insurance. Companies are going to do that. They're going to adjust rates to compensate for fraud.
Sure, yeah.
And I think that's one of the big areas. There are other areas, but that's one of the big ones.
Mm-hmm. Absolutely.
Raising rates could also be not just fraud, but a car manufacturer, they're designing their vehicles to be self-sustaining mobile devices. So if they can put cameras in your car, fix the crumple zones in your car to where you're safer. Everything comes back on.
So the lights just went back on, and the radio that's sitting right beside her head just turned on in the middle of a sentence.
Yes. I like that song. So
Yeah. That was The Cure, by the way. Everybody needs more of The Cure in their life.
yes. So these manufacturers, they're making stronger cars that look better, that look nice, more appealing, more technology in them.
Yeah.
And they don't care how much insurance companies have to pay out to fix those vehicles when they crash.
Yeah. Yeah, no, yeah. If they're gonna, if they're gonna find it, if they have a spot that they can put a sensor,
Yes.
they're gonna stick it there.
Yep.
And when a crash happens, now it's just not just, hey, let's replace this chrome Toyota symbol.
That's right.
It's replace the chrome Toyota symbol that has a sensor in it.
Exactly. And replace the sensor because that sensor just released the airbag. And the airbag does not fold back into place and just snap the door shut for the next time you get in an accident.
It does if you're creative. You need some duct tape.
Yes, I heard that they do that somewhere in the bayou. But I haven't seen it myself.
Right. Well. Oh well. So yeah, and that's a huge driver is essentially the cost of repair.
Yes.
Vehicles, particularly vehicles, are getting more and more expensive to repair.
Exactly.
And another factor is the number of auto claims has been going up. And this has been a shock to the industry.
Yeah.
Because we had like a 5 or 6 year trend where the number of accidents were actually going down. And then about 2015, they shot through the roof. And there's a lot, we don't need to go into all the details on why that is, but, insurance companies had it good for a long time. Because it's like, hey, we're not paying for as many accidents this year as we did last year. And we actually have more policies. This is fantastic. And then all of a sudden, we get overwhelmed with claims. And so that has been the primary driver of the increases, increases across the board. I mean, pretty much every insurance company that I've seen has had rate increases in the last few years.
Yeah.
It's kind of the same thing on homes. We've had, up until last year or so, we've had several years without a really big hurricane. Yeah. It's like we have been dodging the bullet year after year, in America, year after year with hurricanes for several years. And then we had 2 big ones hit. Obviously we're in Houston, the one we remember most clearly is Harvey. But then it was followed up immediately by Florida, right?
Yeah.
I mean, it was really close.
Yeah.
I can't remember exactly when, but yeah, and so, it's like insurance companies prepare for storms like that. But when you have several good years, you can kind of sit back and it's like, oh, well, okay, our homeowners are doing just fine. And I'm not saying that there were no storms. There was hail, there was tornadoes, there were all these things. But a hurricane is one of the big things that will cost an insurance company a lot of money. That one, a hurricane is a punch to the teeth for insurance companies, and they prepare for it. They have money in the reserves. It's not like they're going out of business because of these hurricanes, but it is a hit. And so, these sorts of things happened, and then rates go up. But then the customer comes in. Well, I haven't had an accident, Mel.
That's right.
Why would my rates go up?
Which we just talked about 3 things that make rates go up, and the customer comes in and says, I haven't had an accident.
Right. Well, I'm not committing fraud.
That's right.
My house was fine during the hurricane.
That's right.
So my rate should, if anything, should be going down.
That's right.
And I think they think that there's like this pile of money that has their name on it. Like every time we get their premiums, we kind of throw...
Put it in an envelope and put their name on it.
Well,
put this in Mr. Johnson's envelope. This is his monthly premium.
I was thinking of like a really big vault, and there's just like piles of money with like this cartoon sign sticking out of it, that we've jammed in there, and it's like Bob Smith, and it's just just kind of sitting there. Like if the AC goes on, then all the ones will scatter, but so we can't have AC in there.
That's right.
And so we're just holding that for him,
which is what he calls in for when he gets into an accident.
Exactly.
He calls in and says, I'm calling in so you can go in the back and get my money.
Right, yeah. And by the way, Bob Smith, if he gets a policy and has an accident a month later, he's not thinking that there's only like a $50 bill sitting there.
Yeah, exactly. I was in an accident, but don't worry, I've only paid a couple of premiums, so I'm just going to take care of this myself.
Yeah, I know there's just not that much money in my reserve.
That's right.
And so, I knew that was a risk going in.
Yeah.
That's not the way we think when there's an accident.
That's right.
When there's an accident, then we have a very clear understanding of pooling risk.
Yes.
That we get a group of people, spread the risk across all of them, and I'm the one that had the accident this month, so everybody's paying for my repair.
Right.
But when it's not my repair, it's like, why am I paying for somebody else's repair?
Which is how insurance works.
Exactly how insurance works. Yes, and that's one of the things. It's like, that people, and I want to say that they don't understand how insurance works, but it does seem like they're totally okay with the way insurance works.
Yeah.
If they're the ones that are in an accident,
Right.
or if the number of claims have gone down, and we take the rate decrease.
Right.
They're not saying, well, I know everybody, the number of claims went down, but I did have a claim, so don't take that decrease on my behalf. I want to keep paying because I did not contribute to that good fortune.
That's right.
So they do seem to understand in those circumstances.
Most of the people, if you lower your rates, they think you had an epiphany and you realized just how greedy you've been, and now you're giving some of that money back.
Right, yes.
You should have. Well, I hope you feel better because it's about time.
It is, yes, it is about time.
Which isn't the case.
Right. And, we also get those people who are like, we explain the cost of repair going up, and he's like, well, I'm driving a 86 Ford.
Yes.
I don't have any sensors in my vehicle. It's like, well, yeah, but when you slam into that 2018 Camry,
That's right.
we're going to have to still pay for the sensors.
That's right.
And so, and this is where you can actually track it. I think this stuff is interesting. You can see like how with different cars, the liability coverages will be more expensive and the collision coverage will be less expensive, and then vice versa. Like the safer the vehicle is, the liability goes down, but the collision goes up. Why? Well, because the collision is going to pay for my car, and my car has all the sensors in it,
That's right.
But I'm probably not going to hit someone else. I'm less likely to hit somebody else because of all the safety features. And then the 86 Ford is going to be paying almost nothing for a collision, but the liability will be higher.
Yeah.
And so it's I think it's kind of cool that you can actually see how this is built in. And if a customer is really interested, and most of them aren't, they want to complain.
Right.
But if they are really interested, you can actually show them. It's like, look how low this line is. This is the line that's going to fix your car. That line is low because your car is cheap.
Yes.
And rusty. And I'm pretty sure you dropped a muffler a mile or so back.
Yeah, I mean, you can do a Kelley Blue Book, or even just look up the price of a new Ford F-150. Nobody thinks those are luxury vehicles. That is like the American standard half-ton pickup F-150. Everybody knows what that is.
If I dare you to tell some of the cowboys around here that the Ford they have is a luxury class vehicle.
Exactly.
And you will be punched in the nose.
Exactly. And then when you go and you start putting it together and you find out you can get an F-150 in the range of $70,000 to $80,000.
Yeah, no kidding. Yeah.
That's going to cost a lot to repair.
Absolutely, it is. Yeah.
Yeah.
And as you get into the higher luxury lines where they have, specialized parts that, that we have to order from, some Eskimo that hand makes it.
That's right.
Only from a forge heated by the heat of a dying star.
That no local shops carry.
Right. Yes.
That that Eskimo has this stock and he will not trust anybody else with it and will ship it to you if you need it.
Yes, and we literally need Thor to hold open the lens so that it will get hot enough. We have to pay him for that,
That's great.
So, yeah, and we laugh because we've seen parts like that,
Yeah.
That it's like, oh my goodness, like the luxury windshields and stuff.
Yes.
That have sensors in them or heads-up displays and stuff like that. And you're like, a simple glass windshield replacement
Yes.
already suddenly goes into the thousands of dollars.
That everybody takes for granted is the windshield,
Yeah.
it seems like, replacement. And a quick story, I used to own a Saturn SL. I had my Saturn, and where I was living, we had a big storm, lots of hail, cracked a lot of windshields. Everybody was running dent repair specials and windshield replacement specials.
Yeah.
So everybody knew somebody who could hook you up if they can't get in your car, because everywhere, I think this was in Minnesota, everybody had damaged vehicles.
Right, yeah.
So everybody is saying, call this gentleman, he'll hook you up. It'll be no cost to you if you had insurance, or if you didn't have insurance, $100, he'll have you in and out in a day. So at the time, I don't think I had insurance, or I was getting rid of the vehicle. So I went to get an estimate on what it would cost to replace my windshield. And that's when I found out that my Saturn windshield was going to cost a few $100s, like in the range of $600 to $800 to replace, which was nowhere near what anybody else was paying. And then I found out that one of the things that Saturn did was not license out its windshields to other people who can make windshields.
Yeah.
So everybody else did, Chevy and Ford,
Sure.
and even BMW. You could buy aftermarket windshields.
Yeah.
But for Saturn, which was an inexpensive car, you couldn't. So little things like that people just don't know. I didn't know.
Oh, yeah, a lot of people don't know. And we've gotten into arguments with people about using OEM windshields or windows versus aftermarket windows on a lot of these things. And what people don't know about glass, Ford does not make glass. Chevy don't make glass.
That's right.
They get they order them in bulk
Yes,
from the same manufacturers that do the aftermarket thing.
that's right.
Except there's a little Ford symbol stamped on them, and that's what makes them OEM.
That's right.
And so, and there's a lot of debate about the aftermarket versus OEM, parts thing, and I have my own opinions on that are very definite, but there's a lot of debate on that. But when it comes to glass, there are manufacturers that don't do it that way, but most of them are not making their glass. Most of them are ordering it from the same place that the insurance company's ordering it from. It just doesn't have the little etched symbol in the corner.
That's right.
And yet people are people here, it's like aftermarket parts. Oh, those are not trustworthy. They're not trustworthy. You've got to, have to have OEM everything. It's like, you just want that little Ford symbol etched in the side, and you're going to pay, an extra $400 for that. And they're like, no, you're going to pay an extra $400 for that. And you're like, yes, that's why we don't want to do it.
Exactly. Exactly.
So
there's more things that affect the price right there, and it just even the parts are just the aftermarket and and OEM, and again we haven't even gotten to the accidents like you were saying, the guy that comes in and says, well, I haven't had an accident, but that same guy also comes in and says, well, my son is just turned 17 or 16, and he has a license. Mm-hmm. And why is it so much? Why are the rates so high?
Yeah.
You're stifling his start to adulthood.
yeah, it's not our job to set him on that road, toward
That's right.
adulthood. That's
right.
really a parent's duty.
That's right.
But and it's a funny thing about statistics. The way I always describe statistics is that they're never right, but they're always right.
Yes.
You can never find someone that perfectly fits the statistic.
Yeah.
But statistically, they're like the statistic. Statistically, statistically speaking, your 16-year-old boy is a moron.
Yes.
Statistically speaking, he's a hothead. He likes to drive fast. He's a know-it-all. He thinks he's better than everybody else, and that he should be able to drive 90 miles per hour through your neighborhood. Now, that might not be your son, but it is.
That's right.
And it is not my job in insurance to go have a chat with your son to see if he's on the straight and narrow or if he's an asshole.
Yeah.
We're just going to assume he's an asshole because statistically speaking, he is.
That's right. That's right. And I mean, growing up, I don't know anyone that followed all the rules of the road when they were growing up.
And we just had an episode about we still don't, like the speed limit. We don't follow the speed limit.
Nobody.
We're experienced enough on the road. We can control our vehicle quite well.
Right. And
your 16-year-old does not.
Yes, it does not. And with him being 16, it's going to cause your rates to go up.
Yeah.
And your individual rates to go up.
Yeah.
And when insurance companies start having a lot of that happening, well, everyone's rates start to go up.
Right. Well, and that's like, the conversation. We just had this conversation just the other day. Grandpa got his grandkids on the policy. Says they all live with him. I know how big that house is, and it's probably pretty crowded.
Yep.
All those people in cars there. Mm-hmm. And when we call them out on it, it's just like, he gets a little defensive,
Yeah.
Oh, I'm just trying to help my grandkids out and all, and all this stuff. It's like, well, we're not because you're lying to us.
Yes.
We're not rating this family properly. And if we're not rating this family properly, then other people are having to pick up the other people in that pool are having to pick up the slack.
That's right.
And we see that, and we were both in claims when we kind of had a crackdown on insurable interest. And it took a lot of agents by surprise. That, and the old habit was just when claims caught somebody doing that stuff, it's like, I caught ya. All right, now let's fix your policy.
Yeah.
And they sat down with it and it's like figured out how much money they're losing on that and decided to crack down and actually follow what the policy says, actually follow what the law says, and start denying the claims because they should be denied because you're not insuring things properly that way. It took a lot of agents by surprise. We warned them, but it took a lot of agents by surprise. It's like, well, in the past, we've always good, good job catching me. All right, now we'll fix it for next time. Yeah. But that's not proper, and that's putting additional weight on everybody else. So part of that, getting the rate. One of the things that really needs to happen, and one of the things that underwriting spends a lot of time working on, is getting the right rate for the right person.
Yeah.
This is so critical, because if you are rated too low for what you actually should be rated, then somebody is rated too high, and while that's a good thing for you, it's saving you some money, it's not a good thing for that person. And so the effort, the big effort now, especially with all the technology we have, the ability we have to really narrow down our rating system, down as close to the individual person as possible. Part of that is trying to get the proper rate for good drivers, so that they're not carrying as much weight of that pool, since they're probably not going to be in an accident, as the people who are very likely to have a claim in the near future should be carrying in that pool. So and a part of the answer, and we just had one of these the other day is there wasn't necessarily an accident or anything. It's just, we've been refining our rating process, and that's been good news for a lot of people. And somebody called up, and it was bad news for him. But it was much more accurately reflected of the way he actually drives.
Yeah.
And so that's unfortunately part of the answer. Is like, hey, I didn't have an accident, but you're probably gonna.
Yeah. Insurance companies are going to rate you on the likelihood that you're going to have an accident.
Right.
Are you more likely or less likely to have an accident?
Yeah.
If you are more likely, then you're asking the insurance company to put their money where it needs to go, when it's more than likely you're going to have an accident before you've been with the company for a year. You may have a couple of accidents in that time.
Mm-hmm.
And you will probably leave the company before they can recoup what they paid out.
Well, yeah. And part of that goal is, insurance companies typically want better drivers.
Yes.
And they want to reward better drivers.
Yes.
So, like, when car insurance first started, I mean, the car insurance form was really like, what's your name, what's your address, how many cars you have? And there was a rate.
Yes.
And you multiplied the number of cars by that rate. So you have 2 cars, and the rate is $50. All right, give me $100. There's no underwriting. We just mail that form in once we're done with it.
Which
with
is
the $100.
burned into the psyche of every person on the planet, it seems like.
Oh my goodness, the people who are like, what do you need my name for? Just give me. I just want a good insurance quote.
That's it. You don't need any information. Just tell me. What are you offering?
Yeah.
Yeah.
It's. They get when we get sarcastic with them, they get mad.
Yeah.
Whenever I feel like, okay, how's $42 a month?
There you.
Oh, really? Great. Yeah. Okay. So we need your personal information so we can confirm that estimate.
Yeah. We need to make sure that price is for you, John Doe, that's married and has no younger kids,
right.
And you're have taken every safety course. Oh, that's not you, then.
Right, never mind. It's going to be a little higher.
It's going to be a little higher.
And then they hang up on us. But they weren't serious buyers anyway, so.
Yeah. Once they become your customer and you're talking with them, it's a good thing to educate them, because they're going to bring up prices, industry prices, and it's going to be in a context a lot lighter than anger. You're going to come across a time where you're talking with them, just going over their policy, calling up, saying when they call in and say, "Hey, I haven't gotten my insurance cards." When you're just talking with them, just ask them how things are going. Kind of let them know a little bit about what you do, the insurance industry. They'll start talking, and just kind of laying the groundwork just in case they have an accident.
Yeah.
And they don't just go off because you raised my rates or something.
Well, and that's that's a really good. That's a really good practice, because, when people are pissed about rates, is the absolute worst time to sit them down and have a conversation about the way insurance works. And see, it's quite logical that we doubled your rate. It's really best for everyone.
That's right.
I hope I have satisfactorily answered all your questions, sir. Is there anything else I can do for you? That'd be cash or check or.
That's right.
But if the more our customers know about insurance, and I don't mean like every detail of underwriting,
Right.
But I'm just saying if they know something about their coverages, they're going to be better off in a claim, and they're not going to be as susceptible of just really having a bad experience, because a lot of the bad experiences just happen when they don't know what to expect and they're expecting something different than they get.
Yeah.
It's the same thing with the rates. If they have some expectation of what's going to happen and why it's happening a certain way, they're less likely to get angry about it. And so that's always a good thing. It is really tough because we if you're listening to this podcast, then you're interested in insurance. You like this stuff, like we do.
Yeah.
But most people don't. And so, but as one of the points of this podcast is thinking through ways that we can have these conversations better. But we do not have time to deal with that today. So
That's all right, because when you're talking about insurance, there will be another time.
there will be, yes. And now we have electricity back, so
Yes.
we'll be able to hook up the microphones and everything next time. It'll be very exciting. So, Melvin, thanks for joining me.
Yeah, thanks for having me.
And thank you, dear listener, for joining us as well. We really do appreciate it. Please, we put our Facebook group, private Facebook group, in the show notes. Please jump in and join us there. We are we're trying to build a community where people can safely ask questions and get advice from one another and help one another out. And so please do that, and we'll get more discussion in there. It'll be a lot of fun. So thanks again, and we will catch you next week.